Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Teaching Tech Tuesday, let's take a look at some charts that most likely everyone's looking at right now. The difficult part here for me, maybe in the educator hat realm, is everyone sort of needs to have their own plan to decide what they're doing and where, because there's tons of optionality here, right? There's the short-term view, the mid-term view, the long-term view, the hold forever to your grandchildren view, right? And admittedly, these views on a week-to-week basis aren't for the multi-generational people, but it's still interesting to devise a plan, even on paper, even if you're not trading anything. But the goal here is eventually to listen to people who maybe have some vague idea of what they're doing. You pick up on what you like, what you don't like. It's a buffet. You know, if you don't like the shrimp salad, you don't have to eat the broccoli cheddar soup, right? You can focus on the roast beef or whatever. But step one is, if you know nothing, you have to get exposed to what are people doing, okay? Then you have to have this filter for yourself. Some people love the cloud, some people hate the cloud. Tons of people hate pitchforks. I don't know why, but they do. That's fine, right? You use what you like. I'm just using what I like. I'm using what makes me money. So what am I looking at here? Before the breakout, this is really where most of the work is done from the analysis side. You're asking yourself, what is this? Is it bullish, bearish, neutral? Is it ranging? Is it consolidation? Is it random chop, right? It was kind of everything. It was certainly random chop, and it broke out a type of consolidation, an angry type of consolidation. But what you can always do at a bare minimum is take the depth of the consolidation. I usually cut off the wicks, especially if they're super long. Take the depth of the consolidation and just project it higher. And that should be your baseline expectations of a post-consolidation move. Every time. That never changes. I always look at this. That's why I use fibs. That's why I use the 2x move. It's automatically measuring the depth for me, as you can see here. That's what I'm measuring. I take the high to the low, and I get the measured move. You also get, with the fibs, you get the 1618. I'm using log scale for people wondering. I'm using fib levels based on log scale as well. I use log for everything, including legacy, alts, doesn't matter. I never turn log off ever, 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 ever. If you don't use log, your stuff's going to look a little different. I mainly use log because I've used it forever and I know it works for me. But again, if linear works for you, don't use log, use linear. So we've decided this was consolidation. We've decided the depth of the consolidation. This is where the saying, the longer the base, the higher in space comes from. Another part of this that's probably harder to measure is duration. You know, if this took 7 months, do you really think it's going to be over completely over in a couple days? I mean, that's possible, right? It's always possible that the move is super quick and over, the breakout happens, and we won't get any further upside. I think what's more likely is we quickly break out to what's usually the measured move, or the 1618. We make a decision here. We make a decision. Do we pause? Do we reconsolidate? Do we continue the markup phase? Things you'd be looking for here for bullishness would be a flag or a pennant. Rarely you tend to see this inverted head and shoulders stuff. That's possible. Adam and Eve, that's possible. The classic chart patterns, right? Now, what you don't want to see for continuation would be a head and shoulders. You don't want to see that, right? So you always, in my mind, I'm always looking for what's the most basic thing here that's going on. The most basic thing at the moment is nothing, not yet. We're not seeing anything happen. We tried to sell off overnight, had a wick there. We're back at the highs today. Based on calendar, based on the market, based on what we know about the holidays, we know that Veterans Day was a banking holiday. So this might be, you know, banking money that was sort of stuck for the holiday and people are still allocating into the market. So that makes sense. You know, this doesn't feel like it's just leverage pushing this up. The cloud here isn't really going to help you too much on targets. That's why I like to use the trailing stop loss. It's called Williams fractals. You can just type in WF, it comes up. These are going to be tough to see on the video, but you can see these little hats or levels here, and it will automatically place these levels where it makes sense to do so for high, low, high, or low, high, low. And that's what I like using for trailing stop losses, because then I don't have to think about it. It's automatically there. If it's on the chart, it's not some subjective plan, right? It's automated. So currently the trailing stop loss is at 67. Now what you can always do is go down timeframes, dependent on your plan, right? If you're on 100x leverage right now, maybe your stop loss is 85 too. Maybe that stop loss makes more sense. If you're on 2x leverage or none or just spot, I don't really think there's a reason to do much of anything here personally. Based on the roadmap that we laid out before the breakout, it does make sense to trim a little bit on the leverage side, on the beta side. So what I did today is I trimmed some minor positions. I trimmed some MSTR a little bit. I trimmed some leveraged BTC a little bit, just to acknowledge that, yes, we are basically parabolic. I mean, that's undeniable on the 4 hour. This can always go higher. This should go higher in the cycle, but I'm sticking to my plan. I'm trimming something here, something. The other issue I've got with this currently from the long side, this can always keep going to infinity. That's not the point here. The point is we want to trade this and not overtrade it, but we want to be smart about our risk. So my other issue here is if we look at this pitchfork, it's just a trend channel. And what we saw in March, something similar. Now, to be fair to March, we didn't consolidate for 7 months before the breakout. That's really the difference maker here. We did consolidate for 7 months in 2023 before that breakout. And that essentially had 2 stages. It had a grind up stage and then a very quick move higher. But what we could see here is some denial at an even round number like 100. We're human, everybody's human, everybody's looking at the even round numbers. That includes coins potentially moving to exchanges, sellers who've been holding for a while, sellers who didn't sell them in the past 7 months. They're looking at this probably saying, okay, 100K, that's the next level, that makes sense. That's just a guess. Whether or not we see that, I don't know. But that also aligns with the pitchfork up here. But as we stand here today, everything is okay. I don't see any reason to panic close anything other than being parabolic. That's the only thing. I mean, this is very clear. If you go to like a lower time frame, you can see this. We start off flat. We start to make highs. We start to make highs. It goes quicker and quicker and quicker, and it just keeps going. And usually you tend to see some sort of blow off top. That's another danger zone indication. That would look like similar to, if we go back all the way, let's say 2017, we had very large wicks on the weekly up here. I mean, that's like, it's over as far as the cycle is concerned. So I don't think we're going to get that. But if we start to see that on the daily, if we see some heavy selling, heavy rejections into the 90s, into 6 figures, right? That is certainly an early warning sign, because again, we've gone straight up, and you got to think there's a lot of unrealized profits very quickly. And when that happens very quickly, people are more apt to start closing positions. That's just human psychology. I don't like using MACD so much as RSI, but RSI is another thing you can watch for bearish divergences. In March, what did we see? We saw a higher high here and lower RSI. It's subtle. It's always, most of the time, subtle. It doesn't have to be knocking you over the head. But so far, we haven't even made a higher high with lower RSI. We haven't even made the div yet. So it does give me some confidence that this has a little bit left to run. We can also look at the shape of RSI, and you can see how this is just sort of curling up. We can stay overbought for a very long time. I mean, this was, again, going back to earlier this year. We were overbought in mid-February, reconsolidated for 10 days, and then we went again, right? So this is just something to watch for. What I'm watching for here. What does the next higher high look like if we get one on RSI? And is there any major divergences there? I don't really like looking at volume ever, honestly. There's just too many exchanges, and it's too hard to get a real signal that I find. But if you like volume, use volume. If you like MACD, use MACD. So collectively, that's all I'm really looking at here for BTC. And that's going to inform my decisions on the alts side, certainly, because if we look today, some alts doing pretty well, but most alts still pretty red. It's kind of feast or famine a little bit for alts. So even though BTC pulled back and regained 88, 89, alts are struggling here, right? They are struggling to keep up. And you're getting kind of like a type of tracking error on beta volatility expectations, right? Like if this was a perfect one-to-one for alts relative to BTC, alts would be up. BTC is up 2.25 today. Alts should be up 5%. So any alt that's not up 5% today is losing on that beta argument, right? And you can see a lot of these alts are deeply, deeply red today. Meme's doing well. Layer 1's doing fairly well. I'll hit on Doge as well because this is also parabolic and also has targets that are in the wheelhouse. Now this wasn't the initial, this was the initial pattern down here. So we've not only exceeded that, this is the literal argument for letting your runners run. We've not only exceeded that, but we've now started to get to the target of the falling wedge, which is 41 to 58. And you can see we stabbed that level a little bit already. So Doge feels very overheated, very parabolic to me. I don't know if this is going to collapse. I don't know if it's going to hold. I have no idea. But this chart, I certainly wouldn't want to add to a chart that looks like this. And you're already starting to get this exhaustion wick to the top side there. So I think cycle-wise, the long-term view is, yeah, Doge can go higher. The short-term view is, let's be realistic here. Do we really think this can keep going here? Do we really think it can? Now, the good news for Doge is that it's still several multiples above BTC. So on the bullish argument, it's okay, it might look parabolic and it might look exhaustive up here. But if BTC breaks 90, Doge might push to 45. I just think the risk reward up here is not good for bullish continuation, especially because we're starting to hit the falling wedge target. So I closed a quarter of my position on Doge today for that very reason. What would I want to see as an entry for Doge? I'd want to see generally a washout. You'll know when you see it when people start tweeting out liquidation pictures of, we liquidated $1 billion in OI today or something, right? If you have to ask, it's probably not the day. Like today's not the day yet. But let's say we retraced, 50% of this move. That's back to 20 cents. I think that's a little aggressive. The cloud, the red line here, has it at like 27. So if I had to put blind bids on Doge, it would be 27 based on the Kijun of the cloud. For BTC, that level would be 74. Do I want that to happen? Absolutely not. Do I think that'll happen? Also probably no. But throughout history, these levels have a pretty high hit rate. Now, we did not Kijun bounce here in 2024 or into 2024. We did not Kijun bounce in March. So the next level to watch would be the Tenkan there at 77. That blue line you can see in November, October, December, we hit that a bunch. In March, February, we hit that a bunch. But you certainly have to maintain the long-term view. Otherwise, you will overtrade this. I mean, that's just a fact. If you are having difficulty sleeping or something ridiculous, right? That just means you're probably over-leveraged or you're overexposed. And for me, whenever I feel that, trimming, 10% of the position, right? Just acknowledging that, yeah, I'm probably a little bit over my skis here helps me feel better. It gives you a little bit of a peace of mind. Real quick, ETH is basically the same here. ETH is in the wheelhouse of expectations. Again, we're taking the previous range, we're measuring it higher with fibs. I do this for everything all the time, always. I never do anything different. It gives you this zone. This was the expected move. We are in the wheelhouse of the expected move. To expect much, much more in the near term is probably unlikely. It's going to need to reconsolidate and make some decisions here. It's very early to call, air quotes, call what this is going to be. So it just needs time. I don't like high leverage up here on anything as far as a new position, just because we just had 30%, 40% moves in a couple days, and the market's going to need to renormalize and digest what's going on there. But cloud looks good there. Trend looks good there. Sol, also similar. It's certainly starting to get parabolic on the daily. The weekly on Sol, just like on BTC, is 100,000% a cup and handle. If you agree with me for a minute that this is a cup and handle and your target is, let's be conservative and let's just say, we're going to measure from here to here. Okay. Let's just say that's our measurement. Here's our depth. Our target is Easily 1,000. Okay. If your target is 1,000 on Sol, that's a 5x roughly from here. I wouldn't even watch the daily. I would log off and do something else with my time. Okay. Because the last thing you want to do is watch this get to 300, watch this make a new all-time high, and then you start panicking and you say, oh man, blah, blah, blah. The risk reward here on Sol is certainly much higher based on what I'm seeing, based on the technicals, based on trend, based on everything. I have no clue if it's even going to get close to this. But if it does, I don't want to be kicking myself in 2025 that I overtraded this in Q4 2024, right? And let's say you hate trading and you've never made money. That's fine. You don't have to do anything, right? You can just buy and hold and just sell higher. That's totally okay. No one is telling you have to sit here and watch charts and hold you hostage. So that's how I'm trading the breakout here. I hope that's helpful. If you want me to discuss anything else specific for videos on Tuesdays, let me know in the comments below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.